Hey guys, it's Tim and Jesse with Option Legacy, helping you guys build legacy through trading. And it is Friday, the Friday before Christmas, actually. And, Friday brings us to our point where we go into our Friday market recap. That needs like an echoing sound effect. I'm not going to give it one, just for all of you who wanted one. So, Jesse, what's going on this week? What happened in your portfolio? Sum up the week for us.
Okay, well, this is getting ridiculous.
No laughing.
I got distractions coming at me. Okay, so let me share my screen here.
Go for
Hello, everyone. Let's. I'm just going to share my my platform. Do you see it?
I do all day.
Tasty. All day. I have the SPY chart up at this point, and Tim and I were just kind of talking about the market recap, and I kind of love this little like the bottom has fallen out, people.
Yeah, someone chopped that out, and just there's no stopping it.
There is no stopping it. So let me go into my history and go to 7 days, I guess. Here we go. Yeah, so this week, we did a few things. The first thing I did this week was roll my call in Coca Cola, which I got to tell you guys, this has been an awesome grandpa trade for me, because it's literally half of my capital in my account in this, and I have a small account, so I can say it's half my account, and I'm not too ashamed to say that. But it's half my account in this trade in a poor man's cover call. The leap in this call is 756 days out. It's the 38 call. It's been slightly hurt a little bit just based on this down move that we've had. Everybody, I think, has been pulling money out of everything. Like people are just evacuating money from the market. You know what I mean?
It's like there's a forest fire and they're like, evacuate.
Yeah, exactly. They are evacuating money. They're just going to pull it. And a lot of the pundits and news people out there are just going to say, cash is king right now. So put your hold on cash. And just put your money in cash right now. Put your portfolio in cash, and you'll be fine. Wait out this, and then as soon as it's safe to tread the waters again, put your money back in. I'm not doing that. I'm actually pretty much fully invested in low beta, low volatility stocks, and that's my strategy from here on until infinity. And I don't know how to make it flashy because it's not exciting. But what I do like is that this trade is working. I rolled it this week, and I actually have, let me see here. Yeah, let's do it right here. Check it out. Mm-hmm.
You're more active than I am, bro.
Yeah, dude. This week has been really good. So, all right. So here is the Coca Cola covered call performance thus far. So I'm just going to go through it real quick, guys. It's Coca Cola started. We initiated this trade. It was 49.04. It's currently trading. It's actually dropped $1.47 as of today. Collectively, over the past month that we've had this thing on, it's now 47.57. And the 38 leap that we have has lost $71. But the beautiful thing about what we're doing with this poor man's cover call is each month we sell the call, the 30 delta call. So we've collected now $75 in premium from selling each call. So we've actually collected more than the leap has lost. So we're still up on this trade, even though Tastyworks shows otherwise, because Tastyworks doesn't show rolling in a trade if you're rolling something. So that's why I keep this spreadsheet. So each month I'm just going to start adding more and more of the calls that we sell each month and just track the performance of that. But ideally, you make money in this trade when Coca-Cola goes up and collecting premium. So those are the two ways you make trades. So even if it goes down, see, even though Coca-Cola has gone down, our calls have actually hedged the loss, the entire loss, actually. So it's win-win. All right, let's go back to the portfolio. Okay, you see this now?
Yep.
Okay, so first thing we did was we rolled the call because call was expiring this week. Literally today it was expiring, and I wanted to roll it before expiration. The second thing we did was close out of our EWZ diagonal. So I closed out of this guy for a $3 winner. So it's a scratch for me. It was up, and I decided I needed to take my money and just look for another trade.
Sure.
As I explained in my rationale email. IYR, same deal. This guy, we basically pulled out with the minimum profit because we put this thing on for less than the width of the spread. It was let's see here, it was a $3 wide. It was 84 to 81, $3 wide put spread diagonal. And basically we sold it for less. We sold it for $290. And I closed out for $299 credit. So I bought it for $290, closed out for $299. I made $9 on this thing, which was the minimum. I had to adjust it. It was trading at $3 all day, but it would never fill. So I took a penny off, and it closed right away. If you didn't close out of this trade, you might find an assignment in your account because the short put was in the money. So I highly advise those of you who haven't done so and you are assigned stock on this, sell that stock back and close this position out.
And let's talk about that for one quick second, like a quick second. When you're assigned, it can be scary because you're assigned, it's like 100x on your numbers, get 2 extra zeros on the backside of it. It's
Right.
like, what's happening here? But really, the numbers stay the same. They just multiply. Every number multiplies, adds 2 zeros onto it. So even in assignment, whenever you have an option contract that's worth $3.50, and then you get assigned, now it might look like that those 100 shares, are $3,500.
Right.
But however your setup is, your numbers are going to stay true from the moment that you enter into the trade. If you get assigned, and not all that happens when you get assigned is that you're just kind of numbers get bigger.
Yeah, the numbers get bigger, and it's not too much to worry about as long as as soon as you close that position out, you'll flatten your position and your account will go back to what it was. So it's not too scary. The first time you get assigned, it is kind of like, oh my gosh, but
I got assigned in Tesla, and it was like it looked like my account was short $35,000 or something like that.
Right.
And I'm like, whoa, what did I do? But then I had another long position to hedge it, and it gave me $34,500 that I fought against it. So,
and sometimes you can get lucky. Not that getting assigned is always a good thing, but sometimes you can get lucky where you get assigned on Friday, and the market actually gaps up, and then when you sell it back to close out your position, you actually make some money back on that. So sometimes being assigned can actually kind of help in a sense, because you're holding cash over the weekend. But it's not, if your account can't sustain it, then definitely give it back, because you don't want that in your account. Or you'd be getting a call from Tastyworks or TD, whoever your brokerage is, and to be like, you need to sell this out. Yeah. Anyways, so just a quick thing about the trade. So with these diagonals, I want to, these are just weekly diagonals, guys. So if I open it, I'm closing it on Friday. They expire on Friday. I'm closing it before expiration or on Friday. So you can always just count on me. If I'm opening a diagonal, I'm closing it that week of expiration, the day the short option expires, or before if I'm making profit on it. So just a heads up for all the Suzy subscribers out there. That's my game plan for all these going forward. So you have a clear understanding. But that was all that we did this week. We closed out the IYR put diagonal spread and the EWZ call diagonal spread, and rolled the call in Coke. And it was, so far it was a profitable week for me as far as trades. Cool. So good to go.
Let's go. Give me back the screen, and I will take over, and we'll go in a little bit. All right, let's go. Boom. It's my turn. Desktop 2. Let's go. Share. Okay, so you can see my Thinkorswim platform over here. I'm going to start with market analysis because I love it. Guys, look at this. We have just fallen out, man. The bottom was here, right around this point. And then on the 14th of December, boom. Honestly, I don't know if I've seen this strong a move to the downside in a good while. It's been a hot minute. Any other time that you see kind of downward moves, you do see some green moves, green days in it, but we're not seeing any. It's just falling out. But what I like about it is that it's sitting at 240. I want to take you to a time and a day back here. Let's zoom in a little bit more. So look, these are the, back in 2017, you'll see the dates up here in the top right. What I want to show you is these price points: 243, 240, which is where we're sitting at, 230, we'll call it 235, and then 232, I think, is down here. So these are the next supports that we see going on for the market. I sent out a email with Suzy Trade Alert for the long straddle that we got into today in the SPY. And I said, hey, we're sitting right at, the 243 or 245 support. But actually we came down to the 240. There's momentum. Something to share with you guys is how do I say this? Resistance is more likely to come up, hit, and bounce down than support. You can have a support, but if there is momentum going to the downside, supports don't have as much strength to them. So what do I mean by that? If there's a $240 support range and there's momentum going, it's an avalanche at that point. And we could see, it could crush through any and all supports going down and just continue to crash and crash and crash. So there's a ton more momentum to the downside than there is to the upside. So resistance to the upside has more strength or more consistency to it, whereas supports to the downside have less consistency to it. But these are our price points here. We're looking at 240, 235, and then 232. Those are the moments that we want to mark. But let's look at this. You'll see here, this is kind of a double bottom at the 232 price point. And then if you take it over to, let's go to time frame. Jesse, what were we looking at? Were we looking weekly or monthly?
I was doing 5-year monthly. It's actually it's a gorgeous chart.
Okay, well, let's look at it and then. Okay, well, that's all it is.
Yeah, so you guys zoom in. Yeah, do zoom in there on that.
I'm going to do a weekly real quick. Let's do a week. You can pull this all up on your own time. This is what I want to show you. Where's the 232? It is nowhere to be seen. Maybe here? No, yeah. Okay, so there's some support back down here at 232 in these few days right here. 232 price point on the weekly basis as well. And then if you look at the 200-day simple moving average, that black line, that's right near the 232 price point as well. Oh, that's what I wanted to show you. Let's go. I got it, guys. You ready? Let's go 20-year. This is what I want to show you, okay? So we're going to first zoom in here. Look at the 200-day simple moving average. It's right at, it's close to, it's 235 actually. But let's go look at the last major crashes, which was in 2008 and 2000. This is 11. Okay, this is what I want to show you. Are you ready? Back here.
I'm ready.
Okay, back here in 2008, 2009, when we had our last bear market, whenever it crossed beneath that black line, the 200-day simple moving average, that's when the bear market happened on a weekly basis. When the weekly candle crossed beneath the 200-day simple moving average, that's when the bear market happened. And then we came back up, hit it, and then we started clearing it and using it as support versus resistance. That's 2008. Let's go back to 2000. Same thing here. So back here in 2000, or this is 2001, when we started a decline, back here with the dot-com bubble, once it crossed beneath that 200-day on a weekly basis, 200-day simple moving average, it then didn't recover from it for two and a half years or something like that. So we're close to it. So that's going to be a major point to watch on this market. We're darn near close to it. Now, the thing is, are we going to come down to this 200-day weekly simple moving average and bounce up, or are we going to carry down? If we carry down, that is all over, game over. We're in bear market for 8 to 24 months. That's my synopsis.
The thing that's weird about both those points in time,
Yeah.
from 2000 and 2008, that I noticed on that chart real quick was there was a gradual tick down. Like it was like slow. Like each
I know
week
where
was
you're
like tiny, 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 tiny. This week, I mean, we went from like 50-day to like 200-day. I mean, it was like violent. And
Yeah.
so that's what I was kind of talking about. Like, people are evacuating money from their accounts. They are so worried.
Yeah.
I mean, every picture, if you open up any sort of like money site, like Bloomberg or CNBC, all the pictures are of people trading floor going like this. They're like, they can't, they're like trying to figure it out.
But what's great about options is we get to make money to the downside. We get to
I love that today was such a big down day, but all of my underlyings were green. My portfolio was up today. And yeah, I'm happy. I'm sitting pretty. Go ahead, market, go down.
He's sitting pretty. Okay, so let me go over my weekly trades. I closed out a trade from last week. That was a significant loss. It was like a 72% loss. I paid $8 and some change to get into it, and I got out for like $1.50. Ouch, ouch. That hurt. However, what did I learn from that? That was a call directional trade. So what I've put on since then is what's called straddles. They're long straddles I'm buying to open BTO. This is the only trade that I have to recognize. BTO, long call, long put in this. It cost me $8.12. The same day I actually closed out of the call. This was on the 19th. I closed out of the call because I saw that we were dropping. And so for that, I took in $1.07 credit. And then later on the next day, I closed out of the put and I took in $8.53. So I took in, that's $9.60. I got $9.60 credit on $812 investment. So I invested $812. It came back to me as $960. That was like an 18% return on investment. And then we go over to our current positions, and I've got a larger position on here. It's around $6,000. It's $5,800. This is my bigger account here, and then in my smaller account, I have on a one trade, and they're both straddles. So what happened is I opened this thing up around 10:50 maybe a.m. on today, which is the 21st. Oh, fun note about the 21st, it's the winter solstice. So it's the shortest day of sunlight in the calendar year. And then right before close, I opened up this position, and you can see that my profit and loss since open is about $428 on a $7,000 investment. So $428 sounds great for a day's worth of work, but on we'll call it $7,000 investment, it's only a 6% return on investment. So it's nothing crazy. So what we'll do with this is we will wait and see what happens on Monday. I put on this trade on Friday, expecting the government shutdown to either be positive or negative. I don't care. Just needs to move with a straddle, a long straddle. You have a long call and a long put. So you just need one to move a lot. So you need to move up a lot, or you need to move down a lot. We've seen a lot of down movement, so I wouldn't be surprised if we saw some up movement. But I don't really care. I just need to see some kind of movement, and I think we'll have it with the current market conditions, the trade war, the government shutdown. It's going to be hard to say it's going to move to the upside. However, anything's possible, and it doesn't matter at this point because I will make money to either way. So what happens on Monday, if this thing starts moving up, then we'll close out our put. If this thing starts moving down, we'll close out our call. We'll make the money, let it ride a little bit, maybe a day or two, and then we'll take in those profits. We'll get hopefully anywhere from 10 to 100+% return on investment. 100% return on investment for a $7,000 investment would be really sweet. But we'll see. We'll see. It could just be $700, 10% return on investment. But either way, I don't care. I'm going to make money. So that's what's great about options is you saw all these people, but it doesn't matter. Is whenever you know how to trade in up markets and down markets and even sideways markets, or put it all together and put the odds in your favor, it's it's like, let's just make some money. So that's my goal. We'll see what happens. We're going into the holiday week. Monday is Christmas Eve. Tuesday is Christmas. So could be a wash up. Might have to wait even till Wednesday when the markets reopen and see some movement. After that, as it's going to be low volume. However, it's still been pretty active, even though it's coming into the holidays. So that's all I got. Jesse, you got anything else you want to throw in?
No, I don't have anything else. Yeah, do you want to do Suzy things for open positions that we opened, or what do you want to do?
Let's do it. So at this moment, we're going to cut. That's the tape cutting for all of you regular subscribers or to the YouTube channel. Other than that, we are going to cut the tape here and go on into our Suzy's Trade Alert subscribers and give them the rationale and the projections of what we expect for the going week. All right, till then, I'll see you in the next video. Let's build that legacy. Peace.